Hey everyone, welcome back to Santi. Today we will discuss the S&P 500 outlook and whether it's bullish or bearish for Bitcoin for the upcoming months. Historically, you'll know that Bitcoin was not correlated with equities. Here is the chart of Pearson correlation between S&P 500 and Bitcoin. And as you can see, we don't have any clear pattern of correlation between these two assets. We have 5 years of data for this chart, and it resembles an oscillator, meaning that it goes to negative strong correlation, then in matter of weeks or months, it goes to strong positive correlation. It resembles an oscillator. However, you'll see that from May 2020 to, let's say, May 2021, this 1 year, seems that we had a strong positive correlation between Bitcoin and S&P 500, and it didn't oscillate. We didn't have any strong negative correlation between these two assets. In fact, we had only a few weeks of negative correlation, and other than that, we had strong positive correlation. You'll remember that this was after the QE of the COVID recession, when the Federal Reserve started to print a lot of money and the Treasury started to distribute stimulus checks to the US citizens. We had a lot of liquidity in the markets, and S&P 500 and Bitcoin rallied together. In fact, all of the markets rallied back then because of the excess liquidity levels. That's why we had a strong positive correlation between S&P 500 and Bitcoin for this 1 year period. And then we see that something similar happened in 2022. Here we have a couple of months in 2022 that the correlation didn't oscillate and it stayed in a positive territory. In fact, a strong positive territory for almost 6 months. And that primarily was because we had bear market both in crypto and equities. So the S&P 500 and Bitcoin went down together in 2022. That's why we had a strong positive correlation. And if we exclude these two anomalies of 2022 and 2020, we'll see that for all other years, the correlation coefficient acted as an oscillator. Here, the last 2 years, for example, we see that we have no clear pattern. That's why the overall correlation of Bitcoin with S&P 500 is considered to be low, and that's why Bitcoin is considered to be a great diversifier for portfolios. And the picture is similar if we look at gold and Bitcoin correlation. And as you can see, the correlation between gold and Bitcoin resembles almost a perfect oscillator pattern, meaning that they are not correlated. We don't have any abnormal periods when the correlation coefficient stays in a strong positive or strong negative territory for a long period of time. In S&P 500, for example, we had 2 periods of time when we had a strong positive correlation here we had for 1 year and here we had for 6 or 7 months. However, in case of gold and Bitcoin correlation, we don't have such periods and we have a clear oscillator pattern. And we see that the correlation between Nasdaq and Bitcoin is more similar to the correlation between S&P 500 and Bitcoin, because Nasdaq composite includes tech stocks, and that's why, of course, it's going to be similar to the correlation between S&P 500 and Bitcoin. However, we will concentrate on the correlation between S&P 500 and Bitcoin for today's video, because we are going to discuss the outlook of S&P 500. And by the way, a lot of people anticipated that after the introduction of the spot Bitcoin ETFs earlier this year, the correlation between Bitcoin and S&P 500 will increase. However, that was not the case. If we go to year-to-date chart of the correlation between S&P 500 and Bitcoin, we'll see that it still acted as an oscillator. We don't have any clear pattern of high strong correlation. Yes, after the introduction of the spot ETFs, most of the months had positive correlation, in fact, high positive correlation, strong positive correlation. However, as recent as a week ago, we had a negative 0.86 correlation, meaning that almost a perfect negative correlation between these two assets. So we should give it time in order to draw some conclusions. But from what we see now, we can state that we don't have a clear, strong positive correlation between S&P 500 and Bitcoin, even after the introduction of the ETFs. And another interesting thing is that usually when the correlation of Bitcoin and S&P 500 is close to -1, meaning that it's almost a perfect negative correlation, after a few weeks or months, it usually goes to a strong positive correlation zone. As you can see, for example, here in 2019, we had a negative 0.9 correlation, and after a few months, the correlation was 0.72. Then again in 2019, we had negative 0.82. After a few weeks, we had 0.85, strong positive correlation. Then again, here in 2021, we had negative 0.62. After a few months, 0.87. This one was another instance, although it was only negative 0.54, not a very strong negative correlation. However, it's another instance of moderately strong negative correlation. We had 0.54 negative correlation, then after a few months, 0.88 strong positive correlation. You get the picture. We had a few more instances here in the last 2 years, and we had another instance only 2 weeks ago. We had a strong negative correlation of negative 0.86 between Bitcoin and S&P 500 2 weeks ago. And right now, the correlation coefficient goes up, and it's very likely that after a few weeks or months, it will be in a strong positive correlation territory, similar to these other instances that we looked at. Meaning that after a few weeks or months, if the correlation of Bitcoin and S&P 500 is in a strong positive territory, in that case, if S&P 500 goes up, Bitcoin will go up with it, and vice versa. That's why it's important to look at the correlation between these two assets. And after that, we can look at the S&P 500 chart. Here we have it, the SPX chart. And although from the perspective of fundamental analysis and macroeconomic conditions, the S&P 500 outlook doesn't look very bullish, from the technical perspective, from the technical analysis perspective, it looks very bullish. At first, you may know that the S&P 500 chart painted a cup and handle pattern in 2023. Here we have it. We have the cup, and here was the handle. It was a clear pattern formation. And If we draw the target levels, we'll see that according to this formation, the bullish cup and handle formation, the target was close to 6K, $6,000 for the S&P 500 index. In 2022, when the market was close to $3,500, no one could imagine that after 2 years it could reach 6K. However, now it's very close to 6K. It's another 10% and it will be 6K. From the current levels, it's less than 10%. It's just 8.3%, which can happen. And we also see that after the breakout of the cup and handle pattern that we had in 2023, you see that the breakout was very strong. We had only 3 weeks of red in the first, let's see how many. After the breakout, in the first 21 weeks, 18 were green weeks, only 3 red weeks. That was quite strong. And then we had a consolidation part here. And you might know that the S&P 500 chart found support and its bull market support band. It bounced off it and then it went to new all-time highs. And here you can see another formation. We had a bull flag pattern here. And if we measure the target price of this formation, I just need to copy and paste this for the correct length. If we look at the target price of the bull flag formation, it's close to 6,100, a little bit over the target price of the cup and handle pattern. And this indeed seems very strong. However, we have some other bullish stuff in the S&P 500 chart. Let's go to daily chart. Here, this is the breakout that we had from the cup and handle pattern. And if we come to the current environment, meaning the last few months, we see that we have an upward sloping channel. And it's quite steep. You may also know that we had something like that in late 2023 and early 2024. Here we had a wedge pattern, another very steep formation. And after that, after a couple of months being in this upward sloping wedge pattern, it just corrected for 5%, 5 or 6% here. From the highs, it corrected for, almost 6%. And then it found support at bull market support band. After which, the bull flag pattern started to play out. And now the S&P 500 is in another upward sloping price channel. And it's very steep upward sloping channel. So if we look at the S&P 500 chart only from the perspective of TA, it looks very bullish because we had a clear formation of cup and handle pattern as we saw earlier, and the price target for the pattern was close to 6K. And after that, we had a clear breakout of the cup and handle pattern, and then the S&P 500 index got into a bull flag formation. And the support zone for it became the bull market support band. It also indicates that this rally is quite strong from the technical perspective. Because if bull market support band acts as support, it means that it's still risk on, and chances are high that the rally will continue until proven otherwise. That's why from the technical perspective, it looks quite strong if we ignore the macroeconomic conditions. Of course, we cannot ignore fully. We should discuss technical analysis along with fundamental analysis and macroeconomic conditions. And you'll know that macroeconomic conditions are tight. We have less liquidity levels in the market than a couple of years ago, and it decreases over time because of the tight monetary policy. And from the fundamental perspective, the financial ratios, the multiples, do not seem very bullish currently. For example, the PE ratio for most of the companies included in the S&P 500 index do not suggest that they are undervalued. In fact, they suggest that most of the stocks in the S&P 500 are overvalued. This analysis pertains to only TA, because from the technical perspective, it's very strong. However, from the macroeconomic and fundamental perspective, we cannot say the same. So the conclusion is that the chart of the S&P 500 looks very bullish from the perspective of technical analysis, because the cup and handle pattern that it had in 2023 and also the bull flag pattern of this year both have a target close to 6K, meaning that it's likely that the S&P 500 will rally another 8% before it corrects. Another thing that is likely is that the correlation between Bitcoin and the S&P 500 will increase. That's what history showed us. When the correlation went into strong negative territory, after a few weeks or months, it was back to strong positive territory. So if the S&P 500 is going to increase over the next couple of months, and the correlation between the S&P 500 and Bitcoin will be back to strong positive territory, it means that Bitcoin is going to rise as well. And if we look at this channel that currently the S&P 500 is, if it stays in this channel, which is a very steep channel, you'll see that it will reach to close to 6K, the target level of the cup and handle pattern and the bull flag formation. It will reach this level in September or October, just before the elections in the US. Meaning that Bitcoin is likely to see new all-time highs before that, if the S&P 500 continues to stay in this channel. And if the correlation between S&P 500 and Bitcoin goes back into a strong positive territory. However, we should be cautious in this analysis because the chart of the S&P 500 looks very bullish from the perspective of TA. However, as I just said, we have fundamental and macroeconomic indicators and conditions which do not look very bullish at the moment. So we should be cautious. And we might not see the S&P 500 reaching its target of 6K in this year. It's not guaranteed. It's just based on technical analysis, which seems to be strong as of now. But we should not forget about the fundamental and macroeconomic indicators and conditions. So, this was the material that I wanted to share with you today. Thank you for tuning in. I hope you found this informative and interesting. And I'll see you next time.